Gen AI person, you want to get into VC, you can get into VC. But 2 years from now, will Gen AI be the thing? It could be something else. Because I think the thing is, if you cannot appreciate a new technology and a new thing, you cannot be a good investor, because if you just stick to what you know, you cannot be a good investor.
Hi, welcome Pramod to the Media House podcast Simulated Reality. How are you doing today?
Doing good.
Fantastic. So one of the things, since I've started kind of hanging out with some of the more and more folks in the Silicon Valley, I've kind of gotten a perspective of as to what it is, what works for them, and what are they looking for when they are trying to start as entrepreneurs and start their journey. But this is the first time I was speaking with a VC to kind of understand the perspective of what they look for when especially funding startups in the AI and data science space. So I'm super excited. How long have you been in the Valley? Can you tell us a little bit about your journey towards, you started out in Sun Microsystems and towards VC, and how, if one was to understand how to become a VC, what are some of the ways to kind of do that?
Yeah, sure. Yeah. So I started my career in Sun Microsystems. So I was an engineer there. So most of my product and engineering journey has been like building 0 to 1 products. So when I joined Sun Microsystems, they were working on a brand new product. So I was one of the early new engineer on the product. So I worked on the product for about 5-6 years, and then I worked into venture-backed startups. After that, I think one of the reasons that I moved onto the venture side is really what I thought was a gap in helping founders. So at that time, about even like 10-15 years ago, the venture capital was very much sort of a very boutique industry where you would just get funding and then you go about building your own product. And I really felt a need for helping founders out, particularly in that 0 to 1 journey, just making a product that is feasible and useful. That's how we sort of moved on the venture capital side. So, you asked this question like, what's the best way to move on the venture capital side? So I would say that primarily 3 ways to get into venture capital. Like one is if you're from a product background, if you've been a product manager, particularly like if you've been in one of the sort of hot companies or like very successful companies, like you've been PM at like say Uber or now like OpenAI or Scale AI. I think that is a skill set that VCs look for. The second way to get in is to banking, consulting background, like financial services. And the third background is that if you have been an entrepreneur or a founder or an executive, let's just say you are a CEO, CPO, or a CEO of a big company, those skill sets are also very valuable in VC.
That's fantastic. So, and how do you kind of start off? Do you need some kind of capital from the start to be investing, to be a partner at a VC firm, or do you kind of?
So right now where venture capital is very much sort of a institutionalized venture capital. So 15, 20 years back, what venture capital was really some of these guys who have sold their companies, very successful, when they will start investing their own money, and then they could invest somebody else's money, but primarily, mostly they invest their own money. But where it is now, it's fully institutionalized, which means that nobody actually invests their own money. So all of the money comes from what they call as limited partners, which are like pension funds, endowments, family offices. To answer your question, you really don't need anything to start in venture capital, because if you join a fund that has already raised money, you can start investing out of that fund. But having said that, I think one of the ways to get into venture capital is actually through angel investing. So, and I also encourage people to do a little bit of that, because you will learn some lessons along the way, like what works, what does not work. So when you get on the institution side, you won't make mistakes. So you need some amount of money. Like you don't need to invest a lot of money. You could invest like 5K, 10K, 20K checks, angel checks, that you could get started there.
Fantastic. Now let's talk a little bit about investing in AI companies, right? And that is something that very keen to learn from you. In today's world, AI is a hot topic, right? Probably Gen AI is on the highest in terms of some of the hype that is being created around technologies. I'm sure that there have been a lot of these technologies that have come and gone and probably not survived the hype, right?
Yeah.
Blockchain or AR, VR are a good case in point. What do you think? How do you, as a VC, differentiate to understand whether a technology in itself is a hype or not? And what are some of the criterias that you look for within that technology to see if it will survive the test of time and will scale as a company?
Yeah, so one of the most important thing is, when we are investing, we are really looking to see if customers want to buy this product. Like, is this something that's useful, and they could use it internally within their own sort of IT, or they could use it to support their business, so like a SaaS product, right? So even before we invest, we get a lot of potential customers. We ask them like, "Hey, would you buy this product?" So that goes into the diligence. So that's the most important thing. Is one is like, do people want to buy this product? The second thing that we look for is really, can this team actually build a product, right? Do they have the experience? Do they have the right attitude to build a product? And the third thing, I think, important thing that you mentioned is like having what they call as a moat, long-term moat, right? So you could be the first in the market, but if the barrier to entry is not large enough, you can have like fast followers, and even large companies sort of build that product and commoditize their product. But moat can be different. Like, it could be like a technology moat, like you only have it, you find some patents on it. It could also be on the customer side, where you're still the first mover. You got a lot of customers, and you got a lot of data, and you learned a lot about customers. That also can become a moat over a given of time.
I understand. But this is from the perspective of understanding a company specifically, right? And I would like to dive into it a little bit more. Uh, but if you have to step back a little bit, right, and kind of assess whether a technology in itself is worth the hype or worth the investment of a VC company, is there some kind of checks that you do? So, for example, blockchain, right? There was a lot of hype around it. A lot of startups started around it.
Yeah.
I don't think it has survived the test of time. It's not,
Yeah.
this thing. So, when you assess, did you invest in any blockchain company? Yeah, but then did you end up investing in them? And if not, then why? If yes, then
Yeah.
why?
Yeah, so one of the reasons we didn't end up investing is really like what you alluded to, is like the barrier to entry. So if you look at a lot of these projects, they're all like sitting on top of it, barely like a few hundred or thousand lines of code. So mostly it became like projects that anybody can actually build. So it became like a more of a go-to-market where you try to sell it. And then what ended up selling is like the financial products, like, what they call as like alternative coins, like Solana, and like some of this, what they call as like shit coins, right? So those are like financial products. So they ended up selling quite well, but in terms of like real utility, there was no real utility, I think. And also, I think with blockchain, I think what people wanted to do was something really massive that requires like huge levels of disruption, like, they talk about Bitcoin becoming like the next reserve currency, displacing like dollars and Chinese currency. That is something that takes like decades and decades for disruption. I think it will happen eventually, but it does take a long time. And that is something also as VCs, you just have a horizon of 10 years. Like, you need to exit this investment in like 10 to 15 years. So to me, I think blockchain, like if any company were to become successful, I think you just needed a very long horizon.
So I think from what I'm understanding from you is basically there's this holistic tech stack that makes the technology complete in a way that genuinely it is state of the art and unique to a company's value proposition. That's the point number one. And second point you made is in terms of the external factors also being ready for it. So, for example, with Gen AI, a lot of things are coming together, especially from the perspective of infrastructure and the ability to build these models. So, right. So that did not happen with blockchain, and now this probably with Gen AI. So, well, now that we have observed the technology, I would like to deep dive into the company itself, and from perspective of AI, I would like to understand, right? Since there is a Gen AI hype, there are a lot of Gen AI companies. There are a lot of Gen AI startups, and many of them have gotten a funding as well. And essentially, you're betting against a company scaling, but at the same time, when there are so many companies who are pitching an idea about AI, even if they are even if the product is not really AI, they want AI to kind of be in it, right, in their product or in their offerings. How do you kind of differentiate between companies that have a potential and that might not? What are some of the critical factors that you look for, that you bet on, that this company will scale? And
Yeah. So I think this Gen AI has been a bit difficult because I think Gen AI is one thing that we are seeing is where a lot of companies are going to see like short-term success, but they might not succeed like medium and long term, and that's also always very painful because a lot of these companies will end up raising like a Series A, Series B, but eventually will not able to scale. And the reason is they're not going to be able to scale. And as a investor, what you have to do is you have to take a bet. So what I do like on a daily basis, and I discuss that with my co-investors and like customers and others, is just like how is this technology going to evolve and gestate, right? Like let's just like think like 3 to 5 years from now, let's just say, there are 10, 20 new sort of net new Gen AI applications, and then all of the existing companies have some kind of a Gen AI in it. What does the tech stack look like? What kind of tools will companies use at that time? What kind of usage will people have? And then you have to back it up to current day. You could be wrong, and I think that's where it's, as an investor, it's not an easy job, is because you could be very pessimistic or optimistic. But in general, I think that's literally what I'm doing on a daily basis. Is just like when I look at this company, let us say it's a testing company or an evaluation company or like a dev tools company, I start thinking that, hey, in 3 to 5 years from now, when this whole thing sort of becomes a bit mature, will people use this product or will people use some other product? And can this product sell to, like, say, hundreds and thousands of customers, or will this become like a very niche product? So I think you have to take that bet, you have to think about it, and you can be wrong. And I'm pretty sure I am wrong, and like a lot of VCs will be wrong, but you have to take that bet, because if you do an investment based on like sort of that short-term traction, you will be wrong long term.
fantastic. Yeah, the possibility of betting against it, and there is obviously a chance, especially in early stage startups, that you are wrong. But at the same time, one of the things that I've observed, especially in technology, very digitally tech savvy startups, is that they kind of pivot to a different product or a different strategy midway, right?
Yeah.
And that happens very, very often, especially considering that the landscape itself is evolving, so are the business needs, and so are the applications to business solutions or business problems, right? How much, as a VC, once you kind of invest in that startup, participate in this kind of decision making in terms of strategic pivots to a completely different technology than what was envisioned at the start of it, and how much intervention is healthy from a perspective of a VC?
Yeah, so I'm actually a big fan of pivoting early on. Like, so a couple of the founders that have really done well recently in my portfolio. Initially, they were literally working on like 2 or 3 different products internally, and looking at where they find the traction. So if you're early stage, you raise like a pre-seed or seed round, I think it's healthy to keep an open mind and and be very flexible about the product. What they say is that you should be more passionate and worry about the problem and not the solution, right? And also worry about what the customers want versus what you think that they want. So early stage, I think it's very healthy to pivot, and that is something I think we chat a lot in the board meetings. I think as a board member and investor, I think you need to be open to that. A lot of investors are actually not open to that because they see pivot as failures. I mean, yes, I think if you take a hard pivot, and we will talk about like this changing the whole thing altogether. But I think small pivot, mainly based on understanding where the customer is. Like one of our companies, initially they wanted to focus on, you're talking about crypto, like they wanted to focus on sort of neo financial systems, but crypto was very hot at that time, and crypto companies wanted that product more than the neo banks, and then they pivoted a bit on the crypto side and they found a lot of traction. So I think having that sort of a small pivot in terms of the customers as well as product is healthy. And I think the investors should be okay with that. I think what I'm not a big fan of is really sort of hard pivot, like, when you start something and you just don't get traction. I think something went wrong there, like either you did not do a good job sort of validating it. And in that case, I'm a big fan of just sort of winding that down and starting new. Because what happens is if you don't wind it down, there's just a lot of baggage, like in terms of cap table, like, you want to raise more money. And now when you're raising more money on a different business plan, and you have like different investors, so the new investors say, hey, why should I benefit the whole investor, like they invested in a different thesis. So there's all kinds of complication, and even in terms of the product, a lot of times you want to just think from an open, like a clean slate, like you don't want to take what you have and sort of move it towards other things. So I'm a big fan of just sort of wind it down somehow and then start new.
That's insightful in terms of when to kind of appreciate a pivot or when to kind of not take a complete pivot, considering that so many market factors will evolve, and at the same time I don't think somebody should lose their vision or mission of the company at the same time, right?
Yeah.
So they shouldn't completely start doing, or they shouldn't start doing something completely different than what was intended, probably.
Yeah.
One of the things that VCs bet on in a very, or one of the very crucial factors is to see the founders of the company, or who is going to be the leadership team at the company, who is going to lead that investment. What is your take on this, especially considering AI companies? And the reason why I ask that is many of these founders, right, even if they have started their journeys 20-30 years back, did not work in data science, AI as a technology themselves hands-on.
Yeah.
Right? Data science became a thing probably in 2010s or late, this thing. But before that it wasn't. So they did not start their career working hands-on on data-driven technologies or AI technologies. So then how do you kind of bet on them too and trust them? And what are some of the things that you look for in the founders?
Yeah, so I think if you look at data and AI, like the last 10, 15 years, the founders that have been very popular and sought after are the guys who work in some of these FANG companies like Facebook and Netflix and Amazon and Google, and also some of the leading consumer companies like Uber and Lyft. So the whole thinking was, these companies and the consumer companies, they just had a very different set of problems. They needed to create their own infrastructure, and a lot of the new open source project actually came out of those companies, like, so like Confluent came out of like LinkedIn, and like Tecton came out of Uber. So these guys internally, and also they hired really good people, very strong people in those companies like Uber and Netflix, and they built those platforms internally. So they were the sought after, founders. But the caveat I think we look for is really sometimes, they build these products internally and they think this is what the whole world should use. And a lot of times actually it's not useful at all. So what we look for is, I think the best type of founders is someone like that who has built like really massive scale and scale a product internally. So knows how to build it and also knows how to build it very cleanly and and a good architecture, but at the same time focus on a broad mass market. So what I mean by mass market is focus on like enterprises like SMBs. And that has been a challenge with data and AI. Is like a lot of those products actually are very high end products. Like these guys they build a product for people like them, like in other companies, and there are not many companies like that. So I think the challenge has always been sort of dumbing down a bit, like making it a little slightly different for a broad set of customers rather than what they think are the customers.
Yeah, and one of the things I've seen VCs are really, really well read and well informed people, right? And they read a lot and they kind of understand a lot of perspective. What are some of your resources to keep up to date with
Yeah.
some of the technology, some of the latest news, as well as you mentioned there are some founders who are popular. How do you know which ones are popular? Because obviously it doesn't make the very mainstream news, but
Yeah.
there are niche platforms to kind of keep in touch with some of these things. So how do you do that?
Yeah, so I think VCs cheat a bit. Like I would say, like biggest source of learning comes from the founders. So your founders coming and pitching you every day. They're doing a lot of research. So they're so you're getting a lot of learning just by listening to a lot of these pitches, right? But at the same time, you also need to supplement that with other information, right? So the way like what I've done in GenAI last year is I've subscribed to like this 4 or 5 newsletters, and those guys do a phenomenal job. Like one of the newsletter, they highlight like the top ML papers of the week, and that has been really good. Like I spent the whole Sunday actually going through it. Then there's one guy who runs a newsletter on all of the new products that are coming in AI. So those are like 4 or 5 like newsletters, and then there's a lot of like Substacks. Right, and you get to know about them through LinkedIn, like somebody shares, and I also share that on LinkedIn.
Yeah, you're pretty active on LinkedIn. Yeah.
Yeah, and then the third source, I think it used to be a big source, but not that much anymore, is like Twitter. So Twitter used to have a lot of this founders, practitioners sort of sharing their own sort of insights. And you can train actually Twitter where you can train it to so that you can just see it like an AI feed, and then you can and get a lot of information. And the last one is really to go out to conferences and talk to customers on a regular basis. There are also some very institutionalized, like there are some customer research companies like G&G and others where you can actually talk to customers on a daily basis to learn more.
Okay, fantastic. I think it has been a fun conversation. One last question is: any advice for new aspiring VCs? What should they kind of? Does anyone aspire to be a VC, or you just kind of get into that journey somehow here and there, or there are some really aspiring VCs and
Yeah. So there are a lot of aspiring VCs, because what happens is from outside the job looks very glamorous. So you're sitting on top of this like huge $1 billion fund, and you're in a very powerful and an enviable position where you're writing checks, you're sort of deciding which companies get funded, and also it looks very glamorous from outside. But I think the advice I would give to aspiring VCs, I think the hardest part of the job is really, you have to stay on top of all of the current events and current technologies, right? So that is something that people misunderstand. Like a lot of times they, like for example, like right now is a Gen AI wave. So if you're a Gen AI person, you want to get into VC, you can get into VC. But 2 years from now, will Gen AI be the thing? It could be something else. Like for example, like just with me, like in 2022, as I mentioned, we were looking at crypto. So I had to like learn about crypto so much. And then 1 year later, I have to learn about Gen AI. And this year I'm learning about something else. So in order to be like a successful VC, I think you have to sort of learn a lot. You have to be very open-minded. That is something I think lots of people don't understand before they want to get into VC, that how tough it is to just evolve on a regular basis. Because I think the thing is, if you cannot appreciate a new technology and a new thing, you cannot be a good investor, because if you just stick to what you know, you cannot be a good investor.
Okay, so that's the one piece of advice that I would give. Says,
Yeah.
Fantastic. On that note, thank you so much, Pramod, for making the time to come on the podcast. I think it has been an insightful journey into the life of a VC. and I hope it aspires many to kind of follow their
Yeah.
follow their path and dreams.
Thanks for having me.